welcome to today's First Mining Gold Live update hosted by Six. I'm pleased to introduce the CEO and Director of First Mining Gold, Dan Wilton. We've got time for a few short questions today after Dan's presentation, but if we don't get to your question, next week on Wednesday, July 27th at 11 a.m., Dan's going to be joined by Chairman Keith Neumeyer, who will be presenting a longer update about their projects, and you can ask your questions then. As always, this event is being recorded, and it'll be available on six.com in the coming days. Without further ado, Dan, I'd like to hand things over to you to get us started.
Excellent, Cam. Thank you very much. And really, this is only kind of meant to be a bit of a sneak preview. We just wanted to, it's by virtue of some scheduling, we weren't able to get Keith on until next week, but we did want to be able to have a forum to reach out to the shareholders and answer a few questions, but we thought we'll just hit the really salient high points here and really try and get across why we are so excited about this announcement we made yesterday about the intention to consolidate the Duparquet gold project. So I've committed to 5 minutes. I've got a timer set on my watch here. We'll try and get to that, and I will start that from when I get to slide number 1. So we talked about 5 reasons. We're going to get through 5 reasons here. I'm going to make a few forward-looking statements as we go here, and with that, I'm going to start the timer at 5 minutes. So reason number 1 to be excited, like in all real estate, location, location, location. This project at Duparquet sits smack in the heart of the Abitibi Gold Belt. This is a past producing mine, as we'll talk about, but you can see the location here. This is the heart of gold mining in Quebec. This project was at one point the largest gold mine in Quebec in the 1930s. Unbelievable infrastructure, and everything that you have around this part of Quebec in terms of mining culture. A fantastic place, and I think a critical strategic area. I think when you kind of driving between Rouyn-Noranda and Timmins, fastest way to get there is to go through Duparquet. So this is a great location just off the Porcupine-Destor Fault. And you can see this is an area that's produced 100 million ounces plus of gold in the past. So fantastic location. And again, all the infrastructure you could want from actually 2 past producing mines. Reason number 2, size. This now leaves First Mining holding 2 of the top 20 undeveloped gold projects in Canada, which is saying something. Duparquet, with the project that we have and the other projects, because we are consolidating a group of projects around here beside our Pitt and Duquesne projects. Combined, all those projects have significant resource. This size is important because, this combined will be the 4th largest gold project being developed in Quebec, but has meaningful impact to First Mining as a whole. You can see here, this is huge increase in our resource ounces in Quebec, but importantly, a huge increase in the overall ounces that we have in First Mining. 40% increase to our M&I resource, 50% increase to our inferred. So this is accretive on, almost on every metric of ounce per share that we can look at here. The other thing that's important here that a lot of people, number 3, reason to be excited at Duparquet, it's the grade. This is, it was when we take it to pre-feasibility study in 2014 by Clifton Star. This was scoped as a big open pit with, substantially higher than 1 gram per ton grades. I think when you look across that previous slide of the projects that are being developed in Canada and you map the grades on top of that, this is going to look like one of the higher grades. And that's important. But I think there's another level of scoping that we'll get to when we talk about this project. Another level of scoping that we think that inside the large bulk tonnage resource is a higher grade kind of starter resource that we're very excited about here. So number 4, the reason to be excited, this is an advanced stage project. And this is exactly the projects that we love at First Mining. It has a lot of things that are similar to Springpole from when we really started sinking into the work at Springpole in 2017, 18, 19. This is a project that a lot of people, it's fallen off the radar, but there's been a ton of work done on this project. So from 2008 to 2014, Clifton Star and their partners drilled 260,000 meters plus of drilling. Now, for context, that's more than all of the drilling that we have in Springpole. So when you look at the value that we are paying to consolidate this project, it's well less than you would pay just for the drilling that's there in this project already. But not just that, it was taken to pre-feasibility in 2014. In a tough time in the gold market, the gold price had been falling from 2011 to 2014. But importantly, when that PFS, the Canadian dollar was trading above parity, like 10% above parity. So the economics in that PFS, which I think disappointed people in 2014, were based on essentially a $1,200 Canadian gold price. Well, today, in our down gold market that we're in right now, that gold price in Canadian dollars is still $2,200 plus. So this is, I think, an opportunity for us to resurface a lot of value here. But there's all the other things that have been done in this project as well that are very important to moving it forward, including environmental baseline work, extensive work that was done in 2014, a detailed metallurgical program. So much of the ore at Duparquet, not all of it, is refractory. So it is going to require processing of the refractory ore, but all the test work's been done on that. It's very exciting. I'm running out of my 5 minutes. The last thing to be excited about is we have a well-defined plan to move this forward, largely driven by what the team, our permitting and environment team, led by Steve Lines, did at the Hard Rock project. The similarities between Hard Rock and Duparquet are stunning. Both past producing mines. Both of them had roasters on site. Both of them will have to deal with an environmental legacy, but I think we have a perfect game plan and template at what's happening right now at Hard Rock, which we'll recall sold for $600 million last year and is in construction right now. It's a perfect template for a development path for Duparquet. So we've got a great path coming together here, both on the environment side and developing the plan in terms of scoping what the resource is going to look like and ultimately taking that to a new economic study, a new resource and a new economic study here in the near future. I'm over 5 minutes, apologize, but that's just part of the reason why we are so excited about this opportunity. It really does put another pillar on First Mining and another 100% owned project that we're going to be able to move forward really, and surface a lot of value out of this project. So with that, I will take a couple of questions here. James is asking, does the property have an on-site mill? It did. Right now, there is still some infrastructure on the site, including a very large smokestack and a roaster that was active until the late 80s. They actually used to use the roaster to toll roast molybdenum concentrate, believe it or not. But that is that infrastructure is it all needs to come down. It's historic, and the buildings are there. There's lots of scrap metal for sure, but that's all part of ultimately the redevelopment plan would involve removing some of that infrastructure and building new infrastructure. And a question from John saying, considering the total cash payout will be paying for the new acquisition, will the company be able to stay funded through the Springpole permitting as was planned in the past? And John, this is a very important point that you raise, and it's something that is front of mind for us. So we are going to have to accelerate turning some of the other items on the balance sheet into cash here. We intend to stay very well funded, but this is going to add, a second stream of work that we're going to have to keep funded. So right now, I appreciate we're not in a great equity market, but this is, it's an important time for us to be able to bring this project together. So we're working on plans A, B, C, D, E, and F on that financing, and that could be monetizing some of the share positions or some of the other assets that we have in the partnership portfolio. It could be looking at doing something with the royalties sooner than later. There's also lots of other opportunity for us to bring in capital against those assets and against these assets as well. Something to point out that we're getting this project at Duparquet with no royalties on it, which does give us some more financing flexibility. And Warren is asking a question here, looking at the pre-feasibility study done in 2014. What changes will be required for a more detailed update? And that's a great question, Warren. It comes back to the advanced stage nature of this project. And the one thing that we are understanding right now is that breakdown between measured and indicated and inferred resource. What would you be what would the resource and the drilling allow you to bring in as a pre-feasibility study? Or do you look at the project, including some inferred, as a PEA in a first instance to understand where you might need to convert? But one of the things that we're really interested in here, and through our due diligence that we've looked at, is I think we know that there is a higher grade, lower strip starter pit in this operation. So I think one of the early trade-offs that we're going to have to do is there a start small and expand scenario? And what's the benefit of that versus starting at a larger scale? It's quite different than Springpole in that respect. Excuse me, because as we know, Springpole, the ore body, the best part of the ore body, you kind of need to get to as quickly as possible in order to really bring that payback down. I think here there may be different opportunities, but still lots of work for us to do on that. We still need to kind of roll up our sleeves and get into it. But I think the important things, as we said before, the location, the size, the grade of this deposit, the advanced nature, and the well-defined path forward. I think this is something that we are going to be very, very excited to have as another pillar in the portfolio of First Mining Gold. So really appreciate everyone joining us today for this quick snapshot. And as Cam said at the outset, we are going to have a session with Keith next Wednesday. So Keith and I will come back and we'll plan to do a bit of a more fulsome review, touch on a little bit more information here, get Keith's perspective, not just on why he's so excited about Duparquet, but also, we'll get Keith's view on where we are in the gold and silver markets and see what we can't glean from that. So I hope everyone has the opportunity to join us next week, where we'll have a full hour that we can run these things down. But in the meantime, if anyone has any questions, a lot of our great dedicated shareholders showing up here again, as we always appreciate. Never hesitate to reach out, info@firstmininggold.com, or everyone I think knows where to reach Paul Morris on the IR front. And in fact, most of you know where to reach me. So always happy to receive comments and or questions. And we'll look forward to being back in touch week tomorrow with Keith. So thanks very much for joining us. And I hope you'll join me in helping generate some of the excitement and enthusiasm around this project, and certainly appreciate all of your support.